We're in a bull run. I can't sell right now. It's too early.
You're acting so broke right now.
I'm not broke.
You have millionaires and you have nothing to show for it.
I'm not broke. I'm just low on fiat. But when
When's it gonna
Solana
hit the
hits
top?
250, I will sell a little
Yeah.
bit and buy your back.
What's it at now?
It's at 187.
A
I will
second.
moontay a little bit of Solana on Rampant when it hits 250, and I will buy you your bag. We're early.
You
We're
don't know
super
that.
early right now.
You don't know that.
I've
I've
carefully selected a portfolio of meme coins, and I know they're going to go up, and I'm not going to sell my meme coin portfolio to fund my girlfriend's handbag.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks slipped on Monday as President Trump reportedly granted another 90-day extension for steeper China tariffs and as traders eyed a key inflation reading on Tuesday. And there wasn't much conviction on the tape, guys. Green was far and few between. Tesla was up 2.88% while the broader discretionary space was kind of flat. Very similar situation here with Oracle up 1%. The broader infrastructure space was flat. Coinbase was up 2.92% on the back of some of the movement we're seeing with regards to cryptocurrencies. And then MU reported their earnings early, up 4% on what was a pretty good earnings report. We'll talk about that. And then we saw software really take it on the chin. And this is due to ChatGPT 5's release and their vibe coding embedded in that. I think software is going to have a really hard time. The market seems to be pricing in that companies are just going to use stuff like vibe coding and ChatGPT to create similar systems, their CRM software systems and stuff like that. However, Uber bucked the trend up 1.14%, and that's coming off its earnings. And that was really the story of today. Very few green, no conviction on the tape. Only 3 sectors gained. It was healthcare, discretionary, and communication services, with the S&P 500 down 0.2% and every other sector in the green, with selling led by energy and technology, and then gold also down 1.44%. All in all, a fairly bearish day for equities, but again, not a disaster of a day. The S&P 500 down 0.2% after being up nearly 1% on Friday. That's just how the market goes. But it was selling everywhere: large caps, mid caps, small caps, value core, and growth. And it was just a red day through and through. And the same price action we saw in the US today sort of reverberated throughout the market. We saw Europe was actually pretty red. South America mixed, but mostly red. Asia bucked the trend. You could see a Southeast Asia, Australasia, China, India, very green. And then the Middle East was also green as well. But that was really it. Everywhere else was pretty red. And when the US has a red day, globally, because it's such a big part of the financial markets, that's going to bring the rest of the world down. And the US was red today, despite Citigroup coming out and raising the S&P 500 price forecast, raising it from 6,300 to 6,600, citing a resilient earnings outlook. This is their new year-end target. But what weighed on sentiment today was some of the trade news. China came out and extended the China tariff truce for 90 days. I think the market may be reading into this, but a deal for the US is going to be a lot harder to come by, and it's not going to be as favorable as it is with maybe the EU or with the UK, or as it was with South Korea or Japan. However, this did allow China and US to work out an Nvidia deal, which in my opinion, I don't really like. Nvidia and AMD are now set to pay 15% of revenues from their China chip sales to the US. And pretty much this is just the cost of an export license. It's 15% of revenues, and now AMD and Nvidia can actually sell their H20 chips and MI380 chips or MI350 chips to China, but at the expense of a 15% tax, aka the cost of an import license. And I just don't like this at all, because you're shifting money away from 2 of the best capital allocators in the market to the government. The government's return on invested capital is negative. I would rather trust a 5-year-old with my money than the government. And ultimately what this does is it just makes it more difficult and more expensive to do business in China, where AMD and Nvidia should be competing, because number one, most of the Chinese AI ecosystem is built on Nvidia and AMD chips, and they need to keep that lead because Huawei is slowly building up their capabilities. And if you ban make it more expensive or make it more difficult to do business, you encourage the purchase of domestic providers like Huawei, and then developers will coalesce around their software in the AI space, and that ultimately could diffuse into other countries and make China more competitive. So I don't really like this, but it is what it is, and we have a trade deal because of it. We'll see if Nvidia and AMD have a way to work around that. I don't know, but as a result, both these stocks were down today, weighing on the index. AMD was down 0.28%, Nvidia was down 0.35%. So again, not a disastrous day, but definitely well off the highs, as you can see right here for both of these names. Other market movers were Fannie Mae and Freddie Mac. Both were up in the teens today, and this was on the back of news that Trump is looking to merge Freddie Mac and Fannie Mae into one company, the Great American Mortgage Corporation, and have a massive IPO, apparently under the ticker MAGA, but that ticker is already taken. Nonetheless, these two companies are looking to exit conservatorship, and that date is somewhere around November. Another market mover here was Monday.com. The stock was down 30% on the back of what was pretty good earnings for the quarter, but the guide came in soft. Net revenue retention rate fell for the first time in a very long while. And when you're trading at 100 times earnings, right, this is the situation you're going to get, especially when a guide comes in soft and your earnings are less than stellar. And so you're just seeing a bit of a multiple re-rate, very similar to what happened with the trade desk earlier on last week. AST Space Mobile reported their earnings as well. And guys, it was a terrible earnings report. They missed on revenue and EPS, but the guide came in really solid, and that's why the stock was up 7% on the day. Look at the price to sales, 2,426. Absolutely insane. This company is valued at $15 billion, and it does $1 million in revenue for the quarter. Just absolutely crazy valuation here. But ultimately, the market is saying it's going to grow into this valuation, and the outlook looks very good. We actually are going to cover this stock on the second YouTube channel, so go ahead, follow me, and we're going to look at, is AST a buy of today? And then for everything we saw today, guys, there was 2,800 advances, 3,500 decliners. We saw net inflows in the New York Stock Exchange, outflows in the NASDAQ 100, and market momentum continues to remain as it were. Some of these medium-term averages looking really solid, particularly the 100-day, but we've lost the 200-day, we've lost the 20-day, we've lost the 50-day, and the shorter-term averages ticking lower. But again, nothing disastrous, and this is just telling us that we are seeing a little bit of choppiness at the highs in the S&P 500. Now, looking at the charts, equities were broadly red across the board. The S&P 500, large caps, small caps, the NASDAQ 100 was all down. But again, not a disaster day. Stocks and equities were up on Friday, down today. That's just how the market goes. And even the Russell 2000 was virtually flat here on the day. And we are looking actually fairly positive here in the after hours with regards to futures. And all in all, it was just a red day coming off a green day prior. That's just how the market goes, guys. Internationally, Europe stocks were flat. Middle Eastern stocks were down. China stocks were up ever so slightly. And we are seeing cryptocurrency do a bit of a give back after what was a very solid weekend. We'll talk about what cryptocurrency is looking a little bit later. But yeah, cryptocurrency were actually very bullish today. For example, if you look at some of the Ethereum ETFs, right? So what we actually did today, up 4% here. If we actually go ahead and looked at something like IBIT was up close to 2.2% today, 2.28%. So solid day for crypto, a bit of a give back. And that's how it goes. Ethereum, up 4%, going to be down 1%. But I do think the trend for cryptocurrency is for it to continue to move higher. Volatility did tick up, particularly spot volatility. Yields were a bit of a mixed bag. The 2-year yield gained on the back of some bond auctions. However, the longer term treasuries, the 10-year and 30-year yield fell. The dollar was up 0.24%. Bonds were virtually flat. And then gold and silver, it says we were flat here, but we're actually down on the day. If we just go to the daily chart, you could see that gold was down 1.6%, silver down 2%, 1.93% there. And then WTI was flat on the day as well. But let's talk about the S&P 500. Very, very interesting. Now, guys, look at this. So this is the S&P 500. Look at this price action we've seen here in the last couple of days. Let's just zoom out a bit. Very interesting price action. We had a red day after this massive gap down. Then we had a green day. Then we had a red day. Then we had a green day. Then we had a red day. Then we had a green day. Now another red day. I mean, if this trend continues, we probably should have a green day. That's exactly what futures are telling us, as you can see, right? But I would take all of this with a grain of salt, because the only thing that's going to move the market tomorrow is the inflation report, the CPI report. If we get a cool inflation print, the market probably will go ahead and retake those all-time highs. If not, we're going to see a little bit of momentum to the downside if we get a hot inflation report. I think the market will probably look at an inline inflation report as hot. So ultimately, we want the numbers to come in better than expected. Something else to note on a technical basis, if we are, let's say, to get an inline or hot inflation report and markets were to pull back, this will actually be a lower high, because we put in a high right here, and then a lower high, as you can see, actually would be like a high right there, and then a lower high. And ultimately, that would equate to some downside. And then our very first support zone will probably be right on the 6,200, or, where we actually sort of put in this low right here. That would be the first zone of support. If we take a measured move for the S&P 500, that's looking like, I would say, 2.7% down. I'm not saying we're going to do that in a single day, but that could be the support for the week. However, a cool inflation print, and I think we go ahead and break those all-time highs at the 64.30 areas, 64.40 areas, somewhere along there. The Nasdaq 100 actually did go ahead and print an all-time high on Friday, a wick all-time high, right, an intraday all-time high here today. However, we did actually see a bit of a pullback, and we're looking to coalesce around, and we're looking like we're finding support right here. We actually did see a little bit of buyers. If we go on the one-day chart, you could see a tiny bit of buyers did come in here at the end of the day. But for all intents and purposes, the trend, once we got to these highs, was to the downside very, very viciously. Let's look at some of our other barometers here for the market. Looking at the daily chart, you see European stocks, guys. If we get to the 535 area in the stock 600, go ahead, buy this area. The Israeli ETF is at our zone right here, the 49 area. We want to see if we're going to find support right here, or if we are going to move lower. If we are going to move lower, the area of support we want to buy is this right here, the 46 area, because we use it as support on multiple occasions. However, if we hold this level, I do think all-time highs could definitely come. But you want to scale into this position and keep it 1 or 2% of your portfolio. Nothing super crazy. Let's quickly go ahead and look at Ethereum. Guys, Ethereum is absolutely ripping now. For the last couple of weeks, we've said one thing, that the bulls need to push above this yellow line right here, because we use it as resistance on multiple occasions. We did that. Now what we need to do is just find support above this line, and that will mean we will definitely go higher, and then we can go ahead and retake those all-time highs. If we go to the daily chart, right, we can see we sort of formed somewhat of like a bull flag right here, right? We've broken out. Now what we need to do is sort of move, find support, and then make our way onward and upward to all-time highs. I do think by the end of the year, Ethereum is going to be close to the 5,000 area at those all-time highs. So I do think that even here, this is a great way to sort of buy this breakout. Maybe if we do pull back, buy the pullback and look for higher price action. I do think very similar situation with Bitcoin. However, the Bitcoin price action looks very, very ugly. This candle with a massive wick shows us that sellers were in full force here in Bitcoin, despite the movement we saw into the weekend. However, some positives do remain. We did go ahead and break above this like congestion zone right here. However, the sellers came in a very big way. And if we look at it, the high, that's a lower high, right? We did actually go ahead and put in a lower high, relatively speaking. That can be seen as a bad thing, but ultimately, unless we actually hold this level right here, right, that would just mean a higher low in the context of this massive price action. And I think that's probably, and ultimately that's not a bad thing. But yeah, the selling we saw at the top end right here, that really is a little bit concerning. Nonetheless, if we do go ahead and look at M2 money supply, the path of least resistance for us is to simply just move higher. You don't want to look at the exact level. You want to look at the path and the trend. The trend is for us to continue to move higher in Bitcoin and Ethereum by extension. And that's exactly what's going to happen, I think. And I think that's exactly what's going to happen over the next couple of months. I am very bullish on cryptocurrency. We're just seeing a wave of institutional support, retail support, treasury support, government support, and, ultimately, cryptocurrency, especially Bitcoin and Ethereum, will continue to up. Now, guys, looking at a key earnings mover tomorrow, CoreWeave reports. This is a direct read-through for NVIDIA. Now, I sold some cash secured puts right here at the 104 and then again at the $110 mark for CoreWeave. And, these cash secured puts are deep into the profit at the moment. But earnings is tomorrow, Tuesday, after the bell. And ultimately, what you want to look for, right, is their backlog, number one, and what their expected revenue for 2025 is. NBIS reported their earnings. They actually increased their guidance. I'm expecting very much the same when it comes to CoreWeave. I'm expecting CoreWeave to increase their guidance. And if that is the case, right, you can see CoreWeave continue to push to these all-time highs at the 187. If we got a great earnings report, and I'm going to cover it on the second YouTube channel, and we do actually pull back, I think anything below the 114 area is just a gold mine. My fair value for CoreWeave right now is about $124. So anything below 114, that'd be about a 10% margin of safety, is just golden in my opinion. But We're going to cover it on the second YouTube channel. And I am bullish on CoreWeave. I think the two best infrastructure data center plays is NBIS and CoreWeave, particularly CoreWeave with that bare metal and software approach. Guys, then diving into sentiment, this is the weekend poll we do every single week on this channel. And I just asked the question, how are you feeling about the S&P 500 this week? Are you bullish? Are you bearish? Or are you feeling neutral? And the overwhelming majority, 49% of individuals here were bullish. And that's obviously a good sign because bullish momentum obviously leads to bullish momentum. And, in a bull market, we generally see bullish sentiment. However, something to note, 31% of individuals were still bearish. This is a very, very notable number. And if you actually compile those that are bearish and those that are neutral, this equates to 51%, which is actually more than the bearish sentiment right here. So very interesting to see that even though bullish sentiment is very elevated, right? It's not to say that there aren't any bears or there isn't anybody sitting on the sidelines. What this is telling us is that yes, sentiment is bullish, but this is a bifurcated market. And also something to note about this indicator, oftentimes it is a contrarian indicator for the week. And more often than not, when we see elevated bullish sentiment, we normally finish the week lower compared to the week prior. Nonetheless, sentiment is bullish and that can take us higher, especially when we look at earnings. Guys, I know I've drummed this into you guys for the last couple of weeks, but earnings are very, very good right now. 13.2% earnings growth, 14.8% excluding energy. Very, very solid stuff. But where does this leave us with valuation? And right now, the S&P 500 sits at 22 times forward earnings. So very expensive. We're at the 95th percentile, as you can see right here. The NASDAQ 100 at 28 times, but not quite as relatively expensive as the S&P 500, but expensive nonetheless. We do see valuations look a little bit cheaper here in the Russell. It's sitting at about its 20-year median. As you can see, the equal weight is sitting at about its 25th percentile range, just at the top of that range, and then the mid-cap index at about its 20-year median. So for those of you that are looking for value in this market, right, you can definitely look at the Russell 2000. You can definitely look at the S&P 400 mid-cap. So it's mid-caps and small caps pretty much. And if you do want exposure to the large caps and you do want to maybe extract some value from this market, maybe look at the equal weight S&P 500, but large caps for the most part looking very, very frothy. And guys, we should expect a little bit of churn over the next couple of weeks. You can see here that during post-election years, generally speaking, this is where we tend to peak. And then from here in the month of August, September, even into the early part of October, we can actually see downward momentum and a lot of choppy trade. But ultimately, we're looking for a bottom to be put in for an end of year rally. And with earnings where they are, with the macro still holding in there, the consumer looking solid, and the labor market, even though we did get those terrible NFP revisions, the unemployment rate is still at 4.2%. Initial claims is telling us the labor market is still pretty tight, cooling, but still pretty tight. And as a result, if the economy holds in there, and rate cuts are around the corner, stocks are going to do very well in that regard. And like I said, the macro is looking really, really good. This is New York Fed's GDP now, the nowcast model. And you could see that we're sitting at about 2%. The Atlanta Fed's model is at about 2.5%. So you could say the truth is somewhere in the middle, anywhere from 2 to 2.5% is what we're looking to print here for third quarter GDP. And when we look at the Carson proprietary leading economic index, right, you can see we actually are ticking up right here. And this could be led by, number one, manufacturing, which could be turning around. All of this AI capex is going to start to show up in the data. And number two, rate cuts should spur momentum in manufacturing, but also the residential fixed investment market, which has detracted anywhere from 1 to 1.5% from GDP over the last 2 to 3 years. Of the fact that we're still able to put up GDP numbers of 2% plus with residential fixed investment, which is close to 25 to 30% of GDP, actually detracting from GDP, really goes to show how strong this economy is in the underlying. And I think the next move that's going to support this economy is going to be driven by the manufacturing sector, as well as the commercial and residential fixed investment sector. At the same time, US business applications have actually increased significantly, as you can see right here. And this is as a result of Donald Trump coming into office. Since Trump's election, business applications have soared. Now, looking at data for the rest of the week, tomorrow, we kick things off. Core inflation data. We get these CPI numbers, headline and core. Now here for the core inflation numbers, we're looking for a 3%, okay? and that's going to come in at a month-over-month figure of 0.3. The inflation rate, the headline figure, we're looking for 2.8%, and we're looking for 0.2 right there. So this is going to be absolutely key. I would pay attention to the headline figure more than anything. 2.8% is what we want, or cooler. Okay. Data for the rest of the week, guys. Tomorrow is probably the biggest day of earnings. We're going to be covering these names: Circle, Internet Group, as reporting it Tuesday before the open, and then CoreWeave right here after the close. We're going to take a look at this. So this is going to determine how we're looking on the crypto market and how the AI data center spend. This is going to be a read-through for NVIDIA. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.